The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman. This is the Tiger Technicians Hour on this Wednesday, Fed Speak Day at 2 o'clock, and then the 2:30 Powell gives his, iterations of what's going on. And what we're looking at this particular point is on this 4th of May, we've started off May attempting to find some kind of a tradable low, and we'll talk about that in a moment. But let's just run the numbers. Dow's up 20. What happens on Fed Day is very often, I do recall there were a number of times some years ago where the Dow, the S&P, and the QQQ were up huge prior to the Fed speak, and then after that went even higher. That's very unusual. Usually you get this contraction of either a rising price that comes down to almost unchanged just a little before the announcement at 2 o'clock, or if it's sharply lower, it comes back to pretty reasonably just down a little bit, and then Fed speak. And then you get through. I always say, and I remember this going back to the M1 and then M2 days, that's the money flow way back 1970s and 80s. I remember it was like a Thursday, I think it was, and you'd always be waiting and waiting and waiting. And it took me a long time. It took me actually a few years to suddenly realize, you know what? Look at the chart. And if you had to put down a big, say a vertical line or some kind of notation, or the candle changed color on the day that the Fed was out there, you would find that if you were in a trend, you pretty much stayed in the trend. If you were not in the trend, but you had just turned the corner, the Fed just confirmed. Very seldom is the Fed speak day the actual day of the low or the high. Usually you've turned the corner or you're within a tidal move, and all it does is confirm that move. So now let's go through the different indices. The Dow's now only up a little bit. It's had a nice turnaround. The MACD is slowly, the histogram is slowly improving, but not improving enough for me to be totally convinced that there should be a huge up spike. So it says, what happens here from the low that was made at 32,449 3 sessions ago, which did start at potential trend change. You need a confirmation of the trend change regardless of what the Fed says, to close above the pink 9-period exponential moving average of 33,464, because a close below, and on a very short-term basis, 32,800, 300 points down from here, would say, watch out, you haven't made any decent turn yet. So that's just very simply put. S&P, same thing. S&P actually now is down 10, almost 10 and a half, now down 11 at 41.64. A couple of good candles, but not good enough. You want to see if there's a positive move. You want to see a move into the 40. Whoa, it's a lot of points. Into the 4200s, and then get above the pink 9-period moving average of 42.19. Certainly a close underneath 41.38 would be very negative and suggest that we're not even close to some kind of a decent bounce at this particular point over the next 2 days. That is, QQQ is pulling back to 315.93. That's going to be really important. Why? Because the candle that was formed yesterday, the little doji candle, taking out yesterday's low, would suggest that the trend line support that was held, it broke just under it at 315.50. That's going to be really important on the session today on a closing basis. If by any chance the QQQ is able to get to the 321 to 322 area late in the day, that is after Fed speak, that'll be a good sign. These are what I'm telling you. Let the market tell us. I don't want to predict what the Fed's going to say. All I'm going to do is tell you parameters. The small caps are not doing very well right now. And if you look at gold, this can also be a clue. So gold is down 6 points at 1864. I'm not going to go through the whole litany of what I've been talking about for the last 4 or 5 days, talking about because so many people are interested in the GDX and gold. But gold right now is sitting just underneath the 200-period moving average. It had a chance this morning to move and attempt to close above the 1878.4 in the continuous contract high of yesterday, and that would have been, if it happens today, that starts a gray leg A, and also the MACD and stochastic are showing a little bit of a divergence just at the moment that says there could be strength, well, certainly based on the 120-minute chart, there could be some strength, but I want to see a close. I'm not interested in gold looking at it just as it is right now. I don't have any technical indications other than to say, sitting on the 200-period moving average, which is like a magnet, whether it goes down or goes up, that 1865 level, it just keeps wanting to drag the price back and touch it, whether it goes below or where it goes above, and until it breaks away, either underneath 1833 or over probably 1888 to 1892, it's going to be stuck in this range and holding in either direction. Let's just quickly do silver. Silver has actually been looking a little poorer than gold. It's once again looking very weak. It's at 22.3, down 35 cents. Let's do high-grade copper. High-grade copper is at 4.25. It's starting to weaken quite a bit. It's pulled. Look at the magnet of the 200-period moving average. 1, 2, 3, 4, 5 sessions. It touches it, and then it pulls away, and now it's like a repellent zone, and that's at 4.45. Look at what did I want to look at? I wanted to look at crude oil, up nicely, up 3.5 at 106.09, still stuck in the range until it gets to 113. If it closes over 113, watch out. This is going to be something very important, because all of a sudden the continuation of the weekly chart strength, so that MACD could deflect higher. Talking about deflect higher, look at this. I forgot to mention in all of my talking about gold, I forgot to tell you that the MACD in the monthly chart has deflected lower. Now, if the 9-period moving average of the MACD, the moving average convergence divergence technical tool in the monthly chart, is going to be positive, you would have to see on a month, at least on a weekly basis, at least 2 weeks closing above 1955, about 90 points from here, and then all of a sudden that MACD, which is slightly negative right now, will become fractionally positive. A deflection lower, for those of you who know my work, when I'm explaining it, I invariably do this. I grab a little mini rectangle and I say, oops, deflection lower. Be careful, because if you're looking at the verticals, this is a negative right now, and the stochastic's only at 60%. And if you're looking at the weekly chart, look at this up channel trend line, little mini, you call it Chapman wave inside track, propellant zone, and we're looking at a close on a weekly basis below 1833 will be pretty negative, and so you have to reconstruct the whole. There has to be an infrastructure, technical infrastructure, in the daily chart to start helping the weekly chart. So right now, gold's holding okay, but it's really not showing the kind of strength you want to see. I missed off. UNG. UNG. I can't believe this. It's at 28.73. Unbelievable. It's up $1.94. This is natural gas.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back, and I'd love to look at LPX in a moment. It's in leg D. I just wanted to finish because I'm liable to not finish. I want to finish this. TLT is down 31. Ticks at 117.67. As I said earlier, I believe that if you look at the yields, in many ways, the yields have done everything for the Fed. The Fed only has to legitimize it, to formulate it, to say, hey, as at this particular point, we're looking at the yields at highs, not as high as it was back in October of 2018, and the 10-year at 32.48, that's 3.248, having gone down to 3.98, that's 0.39 back in March of 2020. What we're looking at is now at the 2.995 level, 2.995. All the Fed has to do is say, yes, yields are higher. Inflation is, remember when I was interviewed with Tom just months ago, Tom and I were talking about inflation, and I remember saying, Tom, the problem is, as far as my experience is concerned, once inflation is out of the box, it's so hard to get it. The Fed is going to have to deal with inflation in a way that they haven't really thought through at this particular point that we know of. What happens? Well, the yields are back at almost at the October high of 2018. If you look at the market still managed to have a fantastic rally, but that's because the Fed was putting money to work. Now what you've got is the Fed is taking money out. The Fed is watching inflation creep to the highest levels it's seen since the Jimmy Carter days. Jimmy Carter. And if you're looking at this in terms of perspective, you've got to say oil prices are at highs. You've got almost everything that has to do with trying to curtail expenditure up at highs, rents, just you can go on and on and on. So I don't know what the Fed is able to do. It's the words that they use. That's number one. Number two is I really couldn't care what they say. What I do care about is the market's reaction. And if the market's reaction is, oh, the Fed, whatever they say, is ameliorating their stance to the extent that it affects the market, whatever it is, it might be 50 cents, and they say, if we have to go 75, we'll go 75, whatever it is. It doesn't matter. It's how the market reacts. So the TNX has already done its job. This is only leg C in the monthly chart. It should still go to a leg D. Does it make a completion of leg C above 32.48, the high of October of 2018? Of course, that's 3.248. Or does it do it before and then we double top and then we start to have some kind of pullback through whatever we don't have to overthink it. We're done with the thinking there. It's how the market reacts. So let's just go through this. I've done all of the things that I needed to do. Oh, I didn't do the dollar. The dollar is up at the highs. It is at 103.40. But going sideways like this, you could get a rectangle formation if it continues for a while and then a big pullback. And that's probably when we'll see some reaction in gold. That's just putting it into some kind of perspective. Now what we're also looking at is the semiconductors. That index is really important to me. It's pulled back 2 3/4 points at 235.75. If through the response of whatever maybe it's not even today. Let's go through to Monday. Through whatever happens between today's close, Thursday's action, Friday's action, if at any point in the next 3 sessions going into it'll be 4 sessions going to Monday, if there is a move above the high, a close, sorry, not a move, but a close above the high of the 28th of April in the SMHs at 242.67, I don't think it's good enough just to go above. If there is, even at this point, I'm going to say, if there's a touch of 246.36 and a close above 242.67 on a very short-term basis, you could see a decent rally in the semiconductors, and that would really help the QQQ, the NDX 100. It'll help a number of areas, XLK, etc. If there is at 235 right now, down 2.5, if there is a close under 225.80, that's the low of the 27th, 6 days ago, all I can say is that is not what you want to see, because that would really knock the general market for a loop. So those are the parameters we're looking at this particular point. For subscribers, we've raised cash. We do have some long, we have our core long positions. We've added some long. We've had some really nice trading positions. We've got one on right now on the Dow. Will that hold? We don't know. In fact, we've added another one in an area that I've just discussed. We'll see if that's going to work out. So I want to go through, there was a question in the den. The first one was a statement, IAG, that is I am gold, plunging good earnings, and it's down 26%, down 74 cents at 205. Not good. And if you're looking at, the next question was, and this came up the other day, we were looking at it, Jambalaya had a really great question and said, what about LPX? And I was doing my work. I said, Louisiana Pacific Core, and I mistyped what it was. I should have remembered it from way back. It's been on my radar for years and years and years. It's a building materials company, and today it's up 3.22 at 75.17. So this is so absolutely intriguing. Why would you have the building materials company doing so well in leg D? My suspicion is if you use just technical analysis, you've got to consider that the high that was made the week of 7th of January at 79.77. That would be the target. That's another 2 points, almost 3 points higher. That would be the target, and I would say that would be the target within the next 4 to 6 weeks. It could do it in days. I'm just saying a left side, right side price time match, and that would take you to leg D. 1 penny above that high takes you to leg D. Key support now is in this. It's at 75.04. Key support. It's got a little gap today. This is the second gap. So it's a 2-gap play at this particular point. But either way, between 70 72.30 and 71.70, just in that range. I suspect that's going to be key support if there is a sudden general market slide. Now, wait a minute. How can you have LPX, is the symbol, 74.97 up 3.03. Building materials doing so well. How can you have GPK, which is Graphic Packaging Holding Company, at an all-time high, right as we speak, at 22.13. The high today is 22.30. All-time, I believe it's an all-time high. Absolutely, it's an all-time high. That's a packaging company. Wait a minute, what about PKG? That is a packaging company as well, Packaging Company of America. Just off to the time high. At 161, it was 160, about 7 was the high just 2.5 weeks ago. I'll be back. Now's up 58.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Let me just show you this. I had a quick question. I think it's a quick question. The E-mini, what are we doing? So the E-mini is just making low lows and lower highs. They have made buy modes to Ds and Es, and then there was a peak D. I believe it was a D right at the top this morning. Yeah, that was at 720 something peak D, and ever since the high of 41.91, I think it was. Yep, round number high. We're looking at it's quite a bit, isn't it? 91 down to 57, 33 points down. So we're watching this very closely. And as I say, the Fed has to just articulate a clearer picture. And remember, I always say, when people say, the market hates uncertainty, I say every single day it has uncertainty. What it hates is uncertainty about uncertainty. You go once removed, and then you got a problem. And that's kind of 3 times removed today, because you've got uncertainty about where the inflation will stop. You've got uncertainty about where the yields, where the rising yields have the impact to slow down the economy the way the Fed wants. So those are all factors. We could name it. At least you could go into politics. You can go into anything you want. It doesn't matter. It's the market reaction. That's all I care about. It's like when people proselytize and they talk about their own politics and they expect people to change. I've seen it for decades that you can say whatever you want. You pretty much never change anyone's opinion. It's just, that's the way it is. So we want to see, how does the market react to whatever is said, and that's key. And the big surprise is, how can they negotiate a couple of sentences in such a way that the market says, phew. And that's the big question. All right. So Devon Energy is trading. Louisiana Pacific. Nice. Thank you, folks in the den all over the show. Wow. We have so many people around the world just flashing all these news items. Is fantastic here in Tiger Financial News Network, because we've got the den, we've got the Tiger YouTube, we've got emails, we've got text, we've got all sorts of things going. LBX reported first quarter 2022 diluted earnings, this is X items, of 5.63 per share. This beat last year's same period results by 87.6%. Well, can they do that next year? I'm not sure, but so far that is fantastic. And then people are mentioning absolutely no inventory. Yeah, that's a big question, but you know that what happens is that as prices come down, the general public tend to stay with the price of the house that they wanted to sell for. I mean, I've seen this over and over in different cycles where people, let's say there was a house that was worth $400,000, and people were wanting $485,000. And these are people who haven't really got experience in the markets, but that's what they want. And then they get offered $465,000, and they say no. 485, and then all of a sudden the bids dry up, and then they say, 465. Person comes back and says, what are you for? No, now it's 445. In fact, it's 435. 435, take it or leave it. And then they say, no. And then by that time, the whole market is dissipated. There are no buyers. And those people that could have got 485,000, eventually, if they have to sell, I've seen it enough times. I remember when I was different houses that I bought in recessions, and I know there was one time where the person said, thank God you've come to see me. You're the first person in 6 months. I've seen nobody. And he had come down huge in price, not 50%, but 40-something percent. And I've seen this over and over. You don't believe it? You haven't been through cycles. So, and not only that, there are cycles where nobody shows up. You could even say, I'm going to give it away, and nobody wants it. That's the psychology of people. It's just unbelievable. When things are in demand, people will just flock in without thinking. Can you imagine those people that have been buying in the last 2 years, last year especially, that have said no contingencies? Here in the Northeast, where we have all sorts of things that happen to old houses, no problem. I want your house, and I'm going to pay 10% more than even you're asking because I want it. And then you land up with a foundation problem or a roof problem. Anybody had to replace a roof? I mean, these are nobody. Remember when Barney Frank and all these guys were saying, everybody deserves a house. You've got to have a house. You've got to have a house, blah, 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 during the 2007, 2008 crisis. And then everything fails. I remember saying, has anybody paid for anything expensive in the house? It's all very well giving houses away, but you got to keep them up. All right, enough of that. Let's get on with it. So Devon Energy made a new, was that an all-time high? No, I don't think it's an all-time high. No, all-time high was way back in 2008, up in the 119.20 area, plunges down to $3.64. I can't believe the price of some of these energy companies. So Devon Energy, cup and handle breakout, went to the leg D in the monthly chart. This is where if there is a pullback, 45.48 was the left side high. I don't know whether it's going to come back there now in this particular move because the MACD and stochastic are really strong, but this is a breakout in the Chapman wave. This is called the Chapman ladle breakout. I typed this in, 2-leg D. I typed it in way before it even got there. Can't believe that we don't have Devon energy. All I can say is that for those of you who have it, it's getting a little toppy just based on the technicals. And this V-shaped pattern is something I want. There was a pattern I used to call the Groucho Marx eyebrows. Now nobody even knows who Groucho Marx is. Doesn't matter. And it was this double top pattern that failed and it pulled back a third to a halfway back into the. I don't know if this is the case because the daily technicals are not anywhere close as strong as the monthly technicals are, and the weekly technicals are starting to fail. But this is in the energy sector, and it is still acting really well. Question Peaky asks is, where are we in the housing sector? Well, I think I heard a show with Tom O'Brien the other day, and he was really discussing it in very, very practical terms. And I think what you've got to look at is all these concerns that are really viable, higher rates. In other words, a person who could afford a particular house at a certain price 3-4 months ago is looking at a house that's a lot smaller because of the rise in interest rates. In the very long-term perspective, if you look at it, if there is price increase in your house over a 10, 15, 20-year period, the more you pay per month turns out to be, when you look back, you say, why did I even make a fuss? But at the time, it is very costly, and if you can't afford it, you can't afford it. So you go for the lower price. So that's what you got to be. So where are we in the housing sector? What's so fascinating is very often the people who can most afford stocks or houses at highs are the first to get very nervous about overpaying. Even though they could afford to buy 3 of whatever it is, they get very nervous. So I would put it in this category right now. I think what we're looking at is, for instance, people in my category, have grandchildren who, we've got a very large house, and there's just 2 of us. It's a crying shame that a young family couldn't come and fill it up. But at the same time, where do we go to? I'm not gonna get whatever it is and make a pretty decent profit on the house and then give it up by buying something that's smaller, that has a monthly, whatever it is, condo fee or whatever, and you're actually behind the 8 ball. It's very difficult for people in this stage to know exactly what to do. I'll be back in a moment. 2014.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, on my screen it flashed a screamer, which is WTI. It's up 14%, up 0.72 at 5.67. I believe I'm trying my best to look at this. I think it says W&T Offshore Inc. I've had this for years. It's gone on and off and on and off. Not for years, at least for this past year. And now it is again. It had a rally up to the 650-something area, plunges down under 4, and now it's back at 5.56. These U-shaped patterns and anything to do with energy is so frequent. Now let's just go back. So I just wanted to say I had that. I thought I'd just show it because it's very interesting. Now this V-shaped pattern is really important for Devon Energy, because if you're looking at VLO, now these are in different areas. So Valero, I've got it here as transportation, fuels and petrochemicals and power, whatever. I think I didn't write that correctly, but that's got the same kind of cup formation, and that's gone to the previous high. Remember, these double tops are incredible how the price goes back to within pennies sometimes. 126.98 was the high in June of 2018. Today's high is 124.37, 126.98, and I said 124. So that would be a target for me to say, okay, what's going to happen is real close to that right now. But wow, if crude oil actually from here takes off, where did it go? Crude oil, I just typed it in the wrong place probably. Let me do that again, at CL. So it's up 3.85. As I say, if crude oil starts to break into the 112s from here over the next 2-3 weeks, I don't know what that's going to do, because that's going to be a... Let's see what Jets is doing. GTS, the U.S. Airlines, stuck down 19 cents to 21.27. You're hugging the 200-period moving average. This is why I like to use these tactical tools. Do I have to have anything? I do nothing. I don't type it in. I don't do anything. I just look and I see it was a repellent zone from late March, in the 2160s, pulls back and then tries to go above, it goes above, it comes back, and then it spikes for 1, 2, 3, 4, 5, 6 sessions above the 200-period moving average, pulls back, tries to get back above, and now it's below. So this is going to be very important. Make it as simple as possible. If we're going to have a really strong rally, say in weeks, it doesn't matter how many weeks, but in days, say a 6 to a 9-session rally. We haven't had something for a little while. You want to see the Jets, the U.S. Global Jets ETF, move from this 21.28 area to try to tackle the high and break that high, that peak G high, 23.49. And you want to see it without, at first, breaking underneath the low that was made of 20.79 on the 2nd of May. So these are all parameters to look for, and I'd still say put money to work very judiciously here. There's no rush. Once we start a move up, you'll know it's a move up. If we get through today and all of a sudden Friday's looking very good, then you can start to put money to work. Treat it as short-term money, because we've had no consensus yet, and the VIX index is going to be the big clue, because with the VIX index, all I can say is this: if the VIX index at 29.02 in the 27 or higher area still has the market. I mean, I can't believe this. I keep looking at it. I want you to do this, and I'll do it in a moment. Look at the Dow. Stuck between 35,000, let's go to 500 in the last 2-3 weeks, and 32,400. Look at the monthly chart with all the bad news that's unfolded. Why is that like it? And now let me show you something even more important. Let's go to monthly charts. I got questions coming in. I'll get, I'll do that. I've done the TLT, yes. So I've given parameters there. Look at this chart. This is a monthly chart. Look at that. Black background, but I want you to be able to see it nice and bright. Look at the MACD. Look at the slow stochastic. Look at that sharp decline. This is the monthly Dow. And look how the price is held. Well, the last time it did that was at the high that was made in October 2007, and it pulled back and it held. It made those two little tiny candles there, like a dreaded H pattern. It went to the lowercase h to m pattern, and then it tanked. And that is from the double top high. Let's just go from the high of October. So that went October to the breakdown month of June. All right? And where are we right now? We've got the pattern that looks like an H. So far it's holding. You take out that 22,272 low, and you've got a real problem. So I'm just saying we've got to be careful here. But to have held this well under all these conditions is amazing. Let's go to the S&P. S&P has taken out its left side low. Then it's still green. The 9-period moving average is still over the 14-period moving average. MACD is very weak. Stochastic is down at the 57 level. I use red. I use the slow moving average. That's the key one. At 57, the on-balance volume is pulling back. It's still pretty good. But we're going to see what happens in May, because if May we take out, in this case, the low is 4062. You go under 40 to 4020 in the S&P key support. That's a real problem. But what if, and this is a really big what if, I'm just putting it out there because you always have to look at both sides of the coin. And if you're looking out, and I've still got this Chapman wave Roman candle that we're talking about. Don't sneeze. Have one session where you don't sneeze, please. Look at that Chapman wave Roman candle right there. That was the same candle we got in 2008. Let's go to 2008, right there. Look, there's the candle, Chapman wave Roman candle. Went sideways for a month and then plop, all the way down. The second Roman candle, sideways, plop, down below. So we're watching this. So far, the action has been not quite as similar, but I respect my Chapman wave Roman candle, and as a result, I'm saying let the market tell us a reason why we've got a very heavy cash position. But at the same time, I'm not afraid to go in and see if we can get some potential buys. And then on any big rally that comes up, that's when we're looking to see, okay, now is the time to short, looking at the downside, or is this going to be holding much better? So far, I think the best is sideways, choppy action, which I said would be April. We've done that. I don't know if it'll be the same thing in May, or whoosh, sell in May and go away. I don't know about that. It hasn't worked always, but that's the expression. All right, let's get back to our story here. And what I want you to do is, there are a number of stocks that I was asked about. I'll do them now. Newmont Mining, look at this stock. It makes a peak F in the Chapman wave methodology at 86.37 on the 18th of April. Doji candle, and it has, I think is that a gap island reversal? Doesn't matter. It has a sharp pullback, and it comes down, makes the H pattern, makes a lower low, and now best case so far is a sideways move. And you want mining at 72.02 down 22 cents. Over 75.30 starts another buy signal, but it hasn't got there yet. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So just real quickly, I was asked, can I look at the grains? We were looking at wheat continuous contract up 26 3/4 at 1072. Yep, it's just gone sideways at that spectacular move with the Chapman Wave Roman candle. This is the thing I'm talking about in the S&P monthly chart. And it broke down from that level. And we discussed the whole thing as it was unfolding, a particular candle that I discovered years ago, gave it a title. I don't want to go into it right now than to say wheat is holding the 50-period exponential moving average. It's held it many times. That's why I like to put these in. It just tells you I wasn't looking for it. It was looking for it. And it held it, but I think it's just stuck in a range for now. Soybeans also stuck. It made a double top. It made a peak, E/B, and now what we're looking at is at 1630. It's just going sideways. It's still holding very well. Corn is a little different. Corn made a high with a doji candle. I believe there could be a peak F top if I do a vertical left side, right side price analysis right there. So this is the vertical test. You can see the technicals here are much weaker, but it's still holding pretty well. I think that if you're looking at monthly charts, these grains, they're still holding really well. And I think the DBA, which we have, the DBA is a DB agricultural fund. We've had it since 1377. It's trading now in the 2022s. I think that's the place. It just seems to be holding so well. Another question came in. Amazon. Yeah, I'm just saying these are real big caps. They could have bounces here, but the bigger trend is that these latecomers to the latecomers to the downside party are now emulating some of those, like the DocuSigns that really took a huge spill. So they are still in this huge consolidation phase, and therefore this is such a select market. Even if there's a rally right now, I'm inclined to say to subscribers, let's just go for an index. You can even double or triple the index and get a smaller amount rather than have individual stocks. Let's just go with the whoosh if there is a whoosh. Look, here we are, crowd selling. Very good point, S&P. Crowd, look at that. This is in the cyber sector, which should be doing so well. Well, I have to tell you, this is such a select market. Cash is king, and you've just got to be really careful and put your money to work. We're trying to do very selectively. Let's see what the Fed does. Dow up 103 or more, going to the close, good. Down up more, not good.